Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Anything said in this piece an opinion only. Let's kick off. Okay, I don't know which is the bigger news, and I don't really know what to talk about first, but I'll talk what comes to mind. Immediately is Silicon Valley Bank, SVB, the startup bank, the high-tech bank, the bank based in California, where all the high-tech companies and the startups either deposit money, borrow money, get finance, they're invested in via the startup, by this Silicon Valley Bank, etc., etc. Okay, so the news is already out there. I'm not going to tell you any news, but let's just do a quick recap of what the heck is going on with Silicon Valley Bank. Okay, so Silicon Valley Bank last week issued a note to investors that they're going to raise $2.25 billion in shares, okay, because they're short of money or they're going through some sort of financial crisis. That caused immediate concern in the financial sector. And when you got the venture capital account holders, the venture capital investors, calling on their investors to yank the money out, to take the money out of Silicon Valley Bank, caused a run on the bank. So depositors began to take out over $250,000 a slot, okay, withdraw their money. There was huge withdrawals. There was a run on the bank. Okay, so what exactly happened behind the scenes and what caused that there was a run on the bank? So Silicon Valley Bank had $21 billion in US treasuries, and that was before the Fed started raising rates last year. Once it started raising rates, the price of those treasuries went down. And as a result of the price going down, Silicon Valley Bank, SVB, lost over $2 billion in its investment. It sold its $21 billion. Now, as a result of the loss, it had to go and raise money. And that raised money sent a frightener through the financial markets. And the bank ended up being called in by a receiver, ended up being called in to SVB, the FDIC, which is the Federal Deposit Insurance Corporation, which is the insurance for depositors in the US. Now, what they've stated is that everyone will get their money on Monday morning up to $250,000. Above that, they'll get a dividend, and then there'll be some sort of breakup of the company. The company at the moment has around about $206 billion in assets, and we don't know if that's going to cover enough of the deposits or enough of its liabilities. Now, I've stated over and over again, I'll say it again, there is a liquidity issue, and that started last year. And I did warn everyone there's going to be a liquidity issue. The liquidity issue is by raising interest rates and by the QE program and the repurchasing by the US government of its liabilities is going to contract liquidity within financial markets. And that's what we've seen, especially in the high-tech sector and especially in the stock market. That liquidity, which was taken out of the market by rising inflation, rising interest rates, and furthermore, companies not earning enough money as earnings have dropped, that's caused a liquidity crisis. And that liquidity crisis is going to continue. I haven't spoken about it for a while, but it needs to be spoken about now. There's going to be more and more companies, more and more banks, more and more crypto exchanges that are impacted by liquidity issues. And they're going to fall, and there's going to be more bankruptcies. The next bank that is under the spotlight now, the magnifying glass, is Signature Bank. Signature Bank shares fell 23% because of its high exposure to the crypto market. Now, the crypto market, again, we're not digressing, we're talking about the same issue of liquidity. The crypto market is in crisis mode after Silvergate Bank, which is Silvergate Crypto Bank, and Silvergate Bank noted that they've gone into liquidation. They've got a problem, okay, that also has impacted liquidity. Now, this lack of liquidity is frightening markets and is frightening investors, and it's going to continue as rates rise, okay? So Silicon Valley Bank and Silvergate Capital is another issue on the table, highlighting that we are in a major liquidity crisis. Now, what is the rumors on the street is that Biden may come out and rescue Silicon Valley Bank to the tune of $75 billion. dollars. If he does that, that is the wrong message that he's sending through to financial markets. It will support the banks, and it's another bailout from 2008. Now, the bailout in 2008 was so huge. That's what is the starting point of where we have today inflation. And if the Biden administration bails out SVB, which will save the high-tech sectors and save all the other investors and depositors, then as much as temporarily that will give a reassurance, it's sending the wrong message, effectively, that no bank ever can go bust, because the government, the federal government, will come in and bail them out. And that is a wrong move. Okay, moving on. When I mentioned Signature Bank, I want to make sure that you're all aware that that is probably the next bank to fail because of its high exposure to the high-tech sector and to the crypto sector. And the crypto sector is in big trouble. Okay, anyone who trades cryptos can see the volatility in the leader Bitcoin, Ethereum, and other coins. Stablecoin fell below $1, which is its peg to the dollar, down to 87 cents. Stablecoin is supposed to be a stable coin, and it's not stable because it was sold off and it dropped to 87. Therefore, the peg to the dollar is not working. Okay, so there's a huge amount to discuss here and a huge amount to go into detail on this crisis of liquidity. And we're talking about liquidity. On Friday, when the non-farm payrolls came out, they came out higher than expected at 314,000 jobs created. They were expecting a number of 225. So the economy is doing very well. However, wage inflation slowed, and that sent US 10-year treasuries dropping 23 pips to 3.70% on the yield. Okay, now, as a result of that yield falling, markets should have gone up. However, they went down because of the banking crisis. So we are entering now a phase of a real test. Are we entering a real banking crisis, or is this a temporary blip? I believe we're going into a real banking crisis, and I think there's more and more banks, like I stated, Signature Bank, are going to come under the hammer and are going to fail. The question is Joe Biden going to bail out the banks like Obama did back in 2008? If that happens, then inflation is going to be at 40%, not at 6%, because they're going to have huge amounts of quantitative easing to bail out failing banks and failing cryptocurrency platform exchanges that will fail as a result of liquidity crisis. This is Mayor Valensky with Driving Markets. Have a good day. Can subscribe, can comment, can share. I've also got accounts with other media. Catch you later.